The Indian Rupee has slipped to a record low as global markets
With oil prices surging and investor sentiment turning cautious, the currency is now under significant pressure.
The rupee, however, has now opened at a record low.
Every few months, the same headline returns. The Indian Rupee falls again. And every time, the internet gives you the same explanations. It's temporary. It's normal. Every currency falls. But what if the rupee isn't falling accidentally? What if the system itself was designed this way? Most people think currencies are symbols of national strength. They're not. A currency is trust. And in the modern world, almost all global trust flows toward one thing, the US dollar. Oil is traded in dollars. Global debt is measured in dollars. International trade settles in dollars, which means countries like India must constantly chase dollars just to survive. And here's the problem. India imports far more than most people realize, especially oil, massive amounts of oil. Every time oil prices rise, India needs more dollars. And when demand for dollars increases, the rupee weakens. But oil is only the surface. The real trap begins in America. When the US Federal Reserve raises interest rates, something dangerous happens. Global investors start pulling money out of developing countries and move it into the United States. Why? Because suddenly, America becomes the safest and most profitable place on earth again. This creates a silent financial vacuum. Billions leave emerging economies overnight, including India. Foreign investors sell Indian assets. They convert rupees back into dollars. And once again, the rupee falls. This is why every major global crisis somehow strengthens the dollar. COVID strengthened the dollar. Wars strengthened the dollar. Inflation strengthened the dollar. Then came the wars. Russia and Ukraine disrupted global energy markets. Oil prices exploded. Supply chains collapsed. Food prices surged. Inflation spread across the planet. And India, trapped between growth and dependency, had to keep buying expensive oil in dollars. Then the Middle East tensions returned. Iran, shipping routes, threats of escalation. Every geopolitical shock creates the same reaction. Oil becomes expensive. Investors panic. The dollar rises, the rupee bleeds, and most people never notice the pattern. But here's where the propaganda begins. The internet wants simple villains. One political party caused this. One government destroyed the economy. One event collapsed the rupee. Reality is far more disturbing. The rupee is trapped inside a global system where oil is controlled externally. Capital flows are controlled externally. Global investor confidence is controlled externally. And the reserve currency is controlled externally. This doesn't mean India is weak. It means the game itself was built around dependency. Even powerful economies struggle against this structure. The Reserve Bank of India can slow the fall, but it cannot permanently fight global dollar demand forever. And now, a new force is entering the system. AI, algorithmic trading, predictive finance, automated capital movement. Machines now react to fear faster than humans ever could. Which means future currency wars may no longer be fought by governments alone, but by algorithms. The frightening part? Most people still think currency crashes are random. They're not. They are signals. Signals of energy dependence, global power structures, investor psychology, and financial systems designed decades ago. The rupee isn't just fighting inflation, it's fighting the architecture of the modern world. And the question is no longer, why is the rupee falling? The real question is, can any developing nation truly escape the dollar system?